How do you view oil companies that increase their level of indebtedness so that they can maintain dividends? They're sort of running to keep still, it seems, a lot of these oil companies at the moment, and a lot just depends on how long it takes to get that oil price back up again.
Yeah, I guess you want to look certainly beyond what the near-term expectations are for oil prices. If you look at multiples for energy stocks, oil companies right now, they seem quite high because of the low oil prices. At least priced into that, there is an expectation that they're going to be more profitable in the future, that you're going to see a rise in oil prices, and that's going to support the dividends. That's clearly the bet that you're making today in terms of energy stocks and oil stocks. But for the most part, it does seem on a relative basis attractively valued.
We've put a chart together again for our viewers to see how people feel about the ongoing discussions within OPEC. What you're looking at here is, again, the managed money net longs. And you can see that there was initially some euphoria around the time of Algiers and the discussions there. And then you can see the slide downwards after that as investors and money managers become more bearish about the prospects of an agreement at the OPEC meeting in Vienna on November 30. Where do you stand in all of this?
Well, I think if you look at the position, it seems to be about average. And I think if you think about the oil price, have been looking or expecting a range $40 to $50, or around 55, or around average. Certainly, we're skeptical before when we were above 50. When you've seen such strength in the dollar, for oil to be rallying at the same time was unusual. We expected it to correct on the oil side, and it has. So now seem to be more balanced. You're at that average level. You know, potentially surprised from OPEC, but probably more skeptical. But since we've already corrected, I think we're probably more neutral at this point.
I mean, this is the biggest drop since July 2014 in terms of the managed money net longs. Are they going to reach a deal or not?
If you look at history, you know, the agreements to actually sustainably cut production, they tend not to last. There always is the hope that this time it's really going to work. We would continue to be skeptical.
Continue to be skeptical. Looking at the relationship between the dollar and oil prices, today is one of those days where you throw all those kind of relationships out of the window, don't you? Because we've got the dollar index rallying by 0.5%, which for the index as a whole is actually quite a substantial move. And we've got oil prices going higher at the same time. Is that just because we're transfixed by the election and, you know, maybe next week we'll focus back in on the fundamentals around oil?
Yeah, I think we expect the correlation to, you know, over the medium term to say that a stronger dollar is bad for oil prices. I think today it's particular about relief with the election, what you expect in the Fed, growth outlook, so on and so forth. So certainly you can have periods of time where that correlation breaks down, but we think it is going to reassert itself.